Well, after 10 straight interest rate hikes, the Federal Reserve announcing today it would not raise the rate.
Going to pause it for now. Did, however, signal that it could start those hikes again next month. Let's check in with our financial advisor, Sean Toll, who's joining us again this afternoon. It's great to see you as always, Sean. So let's start there. Okay, so we're pausing for now, but hinting that we could start up hikes again soon. Why do either? What prompts the pause for now, and then why signal it could just be temporary?
Right. So we're pausing right now because we've seen interest rates drop in May for the 11th straight time. They came in at about 4% or so. So it's not where the Fed wants to be. They'd like to see that 2 to 3% range. But if they continue to raise rates to drive that inflation down, the byproduct of that low inflation is going to be a much slower economy. So I think what they want to do is allow them some time to watch what the economy is doing, make sure they don't overstep these interest rate declines, hikes rather. And then once we see some stabilization, then potentially in the future, those are saying a couple of years out, potentially start seeing some cuts again.
And Sean, we've been hearing the warnings that any interest rate hikes will often take time to be fully reflected in the economy, things like actually cooling it down or maybe unemployment. So are we at the point where we're seeing the downstream effects of now, 10 consecutive interest rate hikes until this most recent pause? Or are these downstream effects still yet to come in the economy?
So we've seen quite a bit of them. Energy has come off quite a bit, as has food and some other areas. What is sticky and what is 1/3 of the inflation measure that the Fed uses is real estate. I think we're seeing real estate coming down a little bit, but its impact on CPI isn't reflected because there's such a lag in when they get that real estate pricing information. So we think housing is going to start flowing into the CPI numbers, and we'll see potentially some more decreases. But all the others, by and large, are starting to be reflected for sure.
Sean, let's talk about that a little bit more, the purchasing power for Americans, because as you mentioned, the housing market has been bananas the past couple of years. So that remains in flux, but we're spending so much more for daily goods and things that we all need to buy. So with that said, has the purchasing power been stunted permanently or at least semi-permanently because this inflation remains so high?
I don't know that it's been permanent. There's certainly been a decrease in spending power, and some recent surveys have shown that Americans definitely cut back on their spending. What is working in consumers' favor, however, is still a stubbornly good employment market. The unemployment rate is still very low. New Hampshire has one of the lowest in the nation. So with such a very tight labor market, that allows employees to have a little bit more leverage in terms of asking for raises or getting raises from their employers. So yes, we've reduced our spending power, but it hasn't been as much as inflation would indicate alone.
And so, Sean, today with this pause, does it mean anything when it comes to day-to-day expenses? Should we expect to see anything reflected in, say, grocery costs or anything like that? Or are we really just expecting this to be a one-time pause until potentially they start raising rates again?
I don't think we're going to see it in the prices of goods. Where we might see it is in mortgages. The 30-year mortgage rate has recently come down, which has been good because it's 7.5%. It made housing very unaffordable for a lot of folks. We might see car loans coming down. So it's really going to be the interest rates on our debt that we see coming in. Hopefully the prices come down as well, but that's going to be, you asked on the previous question, it takes a while to take effect. I think that it's going to be a while till we see more decreases in those cost of goods.
Understood. Sean Toll, financial advisor. Always a pleasure to see you, sir. Thank you so much.
My pleasure.